Okay, folks, welcome to Monday Night Stock Charts Live. Happy President's Day to everybody. To those that were off, hope you had a great day. Hope you enjoyed your long weekend. And I am running into a lot of technical issues. Most of them have been resolved. I had the RAM increased on my computer. Yeah, that's done. But I'm waiting for a component to come in to get my dual monitors up. I'm working off of one monitor. I had my laptop set up here to uh, watch the comments come through, but I decided to do a update because I haven't used it in a while, and it's finally booted. So bear with me 1 second, and we will talk about the futures action. And the futures markets were open today. I think they were open until about 1 p.m. And what we're going to talk about today, besides the news that's coming out this week, we're going to be talking about stagflation. Uh, what what are we seeing out there in the industries, meaning gold, silver, CRB commodity index, implying that we have stagflation moving through the economy. So what is stagflation? That's stagnant growth with inflation. Now you may be saying, wait a minute, the jobs data has been great. Bidenomics was outstanding. Every single jobs report beat. Not anymore. That's all over with. I warned during the election and soon thereafter, as we were waiting for the inauguration, I warned, beware of the revisions. We were going to get revisions, and were I President Trump, I would have been hammering the Bureau of Labor and Statistics, get those reports out now so I can blame Biden. And he did. And it wasn't wonderful. Everything's still booting up here. I apologize. So I'm going to get to people's comments in a moment. Once this is done updating and I could see them, let's go to the futures action. And hopefully my audio is good. Let me do check for audio to make sure that's good. I don't know why it's taking so long to boot up here. Bear with me. I had this all figured out. As soon as I load up the computer, reboot, update. There we go. I just connected to my hotspot on my phone. I think it's a connection issue. Okay, while we're waiting, let's get to it. Let's talk about the futures action. Let's begin with the NQ. The NQ is the NASDAQ 100 futures, and we are up 0.11%. Let's drill down to a 5-minute view. I mean, there's not a lot of data here. We're up all day today, but we hit this upper band of resistance in yellow, and it's not insignificant. If you pull back to a 4-hour view, I believe that's what I have it set up for. Yeah, about a 4-hour view. Not insignificant. And you can see that we backed off of it. Now let's face it. We want to, I don't have a bullish opinion on this market, but one thing that we won't do is we're not going to kid ourselves or delude ourselves. We're going to say, okay, we have a triple Q market, which it is, ETF, but it's a triple Qs. It's an index, and it made new all-time highs last week. We have the S&P 500, new all-time highs. Therefore, bull market. Not much else to talk about. Do we want to buy into the fact that it's a healthy organic bull market? I could argue that point, but you can't argue when you're positioning the direction of the market, or else you will go broke. Dow Jones Industrial Average. I can't believe this is taking so long to load up. Incredible. You know what I'm going to do? I'm going to go to YouTube. I'm going to back out of here. That's what I'm going to do. Let me close this out. Get rid of that echo. There we go. Okay, so for those folks that are coming and leaving comments on Twitter, I'm not going to be able to see your comments. I apologize. For those on YouTube, I will be able to see your comments. Okay. Better. All right. We have Corey. Hey, Corey. We have LM Visor. Hey there to you. Talon. Welcome, brother. Larry, US dollar still durable. So avoid the emerging market stuff. I usually agree with you. I'm not going to agree with you on that right now. I think the emerging markets are getting ready for a move up higher. Unless, of course, the U.S. equity markets really take a nosedive. Emerging markets will go down along with them, but I think they're going to be the first to recover on a weakening U.S. dollar. Okay. So, Talon, how's the audio? Audio's okay? All right, let's get to it. Dow Jones Industrial Average up 0.21%. RTY, the Russell 2000, up 0.14%. Not a lot of activity here. I guess because the markets were open today. ES, 0.17% to the upside. Now, what I'm noticing here is I was saying that we're up. I'm not seeing a new contract opened up here yet. We are down relative to the close. So this is wrong. We're down relative to the close today. I was just calculating Friday and not calculating in Monday. 217. Oh, they're considering this. Okay, I see what they're doing. After hours price action. So we closed at 1 o'clock. They're calculating in after hours price action. Okay. So this is Monday's price action. I'm so used to doing Sunday Night Futures Live, where that's the beginning of a new trading day, not using Monday Night Futures Live. Okay, now it makes sense. All right, so we're still up on the day, but well off the highs of the session. Let's take a look at what else. Let's take a look at bond yields. Bond yields are up by over 1/3%. Let's see how they closed out last week. Not good. So I think this rally, for now anyway, is going to be short-lived. Let's check in with the dollar. This is last week's price action. The dollar looks pretty weak. Euro. Let's go to the weekly charts here. Yen, the last time I looked, I think it was last night, yen was moving up higher. This is the euro. We had a good week last week. I think we're going to move up higher here, up and into this resistance level in green and this 21 period EMA in orange. Let's check in with the yen. Yeah, the yen looking really, really bullish here. This is not good for the U.S. equity markets because this impacts the yen carry trade and not in a good way. And the yen carry trade is critical for the U.S. and not just for the U.S. stock market, for the global stock markets. Borrow cheap yen, arbitrage it in the U.S. and global bond and stock markets. If the Japanese are raising interest rates because they have to, they doubled their interest rate in the past year. That means the yen goes up, and it means that arbitrage play is not as, it's still attractive. Don't get me wrong. It's not as attractive. It becomes more risky. Now, I think we're entering an environment where we got to keep a much closer eye on the commodity markets. We know the dollar's under pressure. We know that yields are under pressure. We got to keep an eye on gold. Now, I went over this with members over the weekend on the week ahead commentary that we were up against the weekly upper band of the third standard deviation Bollinger Band. In short, you're not supposed to be there. We're extended. That being said, we haven't gone parabolic yet. And I've been chomping at the bit to sell calls on my gold futures contracts. I sold 2 tranches of short puts, meaning it's a bullish play. People hear puts, they think it's bears. It's not. I'm bullish on gold, and we're doing very, very well with it. But now that we're getting a little bit overbought, I want to watch for that parabolic move up higher on gold and then sell calls into that strength. Goldman has a price target at current of around 31 to 3,200. I'm going with the high end just to be safe. I think Goldman is pretty much spot on with what their price target is. Could be even a little bit lower if we get a parabolic move up higher. And you could validate it by simply doing this. Just play connect the dots with your prior highs. We'll use this one here. And extrapolate it out. So right now, remember, this is only a weekly chart. Right now, if we were going to test this upper band of weekly resistance, that would bring us up to $3,034. That's this week. But next week, this upper band of resistance even moves up higher to around 3,050. Each week that goes by, it goes up higher and higher. So therefore, the longer this consolidation takes place, the greater the validation or the greater the breakout on gold is to the upside. I don't want to sell calls against gold while it's consolidating and threatening a breakout. Don't want to do it, especially with the dollar pulling back and yields pulling back as well. It's kind of picking up pennies in front of a steamroller. This just doesn't make sense. So you want to wait for the reaction. You want to wait for that blow off top. And then you start selling call spreads. If you can go out 3,250, 3,300 to give yourself some room, you'll be much better off than selling them now because you want to sleep at night. You don't want to take on too much risk because one day you're going to wake up and you're going to see gold up 100 points just like that because that's the way the news is going. Everybody's all excited about the new Trump administration. I get it. I love Doge and all that stuff. I'm with it. But there's so much damage that's been done. And the amount of debt that we have consumed and the amount of debt that we continue to build, and the fact that the jobs market is not looking good is a problem. So buckle up, folks. Let's check in with silver. Now, silver, we are long of silver. We are long with a call spread. We are long with put spreads. Again, bullish play on silver. I think that silver is going to have a catch-up move against gold. I mean, once silver goes, so if you think natural gas is explosive, and it is, silver is just as explosive once it gets going. So on this chart here, you had a Bollinger Band squeeze, Bollinger Bands in orange, Keltner channels in tan, I guess, beige, mauve. And we appear to be getting ready for a breakout. I think that we're coming up here to around 34 on silver. That's a big, big move, a very big move. And you could see we broke out back here the week of 127, week 1 consolidation, week 2 consolidation, week 3 consolidation, and we could easily break out from this point here. And we are down fractionally at the open. The intraday chart is not exciting at all. In fact, I would argue the intraday view, we have a head and shoulders setup, left shoulder, head, right shoulder. So intraday, silver not looking great. I don't see a compelling reason to go buying right now. You show me a move above 33, then I get a lot more interested. So we have a position long. We're good. I don't see any reason right now to go adding more, especially when you're buying options. You want to make sure you're buying because you have time against you. We're going out right now about 66 days on our strikes. I should say expirations, not strikes. What else do we want to talk about here? Let's stick with the commodity story for a moment. Let's talk about energy. I'm hoping for a pullback on natural gas. We had our natural gas position called away from us. We made money. Good. It's down 3.5%. We made money. We booked profits on our put spread. So we have no position in natural gas right now. So I'll wait until the morning to see how Boyle opens up. That's a leveraged product, putting you long of natural gas. It's 3 times, I believe. So not for the faint of heart. Let's check out the option premiums here. I like the premiums on the futures. Oh, this is the NQ. What happened here? Why didn't this sync up? I have NG. Why is it going to NQ? Not a big fan of Thinkorswim. I think Schwab made a big mistake. All right, so the premiums here are good, 45 percentile. On Boyle, I don't think that they're anywhere in that ballpark. I may have to trade. Yeah, there's no IV rank at all on a leveraged product, no less. So we may be doing the futures on natural gas. We do have a cold front moving in. I'm worried more about a warm front moving in and natural gas taking a nosedive. The next couple of months are not wonderful for natural gas. So I want to sell puts into weakness. Thanks, Talon. Appreciate that. Tim. Hey, brother. Welcome. All right. Let's check in with light sweet crude. Light sweet crude making a move here. up nearly 0.75%. This has been a laggard of late. We opened up a position in the energy space last week, small position. So this is a nice move on the day. We're giving back some real estate right now. It looks as though we were up about just shy of a percentage point at one point. Let's check in with the ag space and protein, meaning hogs. Hogs right in front of me. All right, so we have a new contract that opened up on hogs. Oh, this is looking beautiful. I mean, we have a beautiful Bollinger Band squeeze on hogs. I don't think I could sell options here. Oh, I can. I can. I've never traded hogs before. Oh, that's Boyle. I think Thinkorswim is messed up tonight. When I enter a symbol, it should carry over to the trade tab. Yeah, I think Schwab made a big mistake. This is 20-year-old technology. Not great premiums. I mean, to sell a 13 Delta, you're going to make $200, risk $3,800. I mean, that doesn't make a lot of sense. I mean, too much risk, not enough reward. So we're going to walk away from that trade. All right. So hogs looking really good. It looks like pork prices are going up. Home heating oil down. Thank God. LE is cattle. One thing about cattle, it's really been coming in quite a bit. Now, after the election, I had expected cattle to sell off, and it did very briefly right here. And then it was able to rally. I think that we may be putting in a top. The cattle stock here in the United States is at its lowest point since the mid 1960s. In the mid 1960s, we had about maybe 200 million people living in this country. So we have the lowest cattle stocks since the mid 1960s, and our population is up more than a third. We import most of our cattle from overseas. So I think that we only have one way to go, and that is up with the cattle stocks here. And so much for eat the bugs. And we got to get back to eat the New York strip, which is my favorite cut. And hopefully LE comes in here a bit. I'd like to see a rally here and a double top, and I'd like to short lean hogs, because if this does break, it's going to be a multi-year breakdown in hogs. I mean, this has had a heck of a run, a monster run. What else do we need to look at? Palladium has been setting up here. Nothing exciting right now. Platinum. Platinum, you have a Bollinger Band squeeze setting up. We got to keep an eye on platinum. Copper. Copper's already broken out. Now, one thing about copper is I don't think it has retested. It is not. So if you get a shakeout on copper down to around 4.39, that's very attractive. Nibble there, add more on a follow through to the upside. All right, corn prices. We had a position on, we booked profits here to the long side. Corn looking good. Unfortunately, it's inflationary. This is going up. Corn prices are going up. Soybeans. We have a position on in soybean oil, whatever that is. I have no clue. So soybeans are not doing much here. Consolidating. Tight Bollinger Band squeeze forming. Wheat getting ready to, it's breaking out now. It's breaking out now. I don't know what the multiplier is here. I don't know. It's a high probability play. I'd like to get paid more, though. I take on the risk. I want to get compensated. So you're risking 3,600 to make 4, not including commissions. Not sexy. What else do we have here? I think we covered it. Let's just check back in with the NASDAQ futures. They're giving up ground. Volatility is moving up by a half percentage point. Let's check in with the Aussie Japanese yen trade. What's that? JPY, AUD, JPY. There we go. Figured it out. All right, this is down. Usually the Aussie dollar Japanese yen pairs trade, if it's up, it's bearish for U.S. equities. Right now it's down. So not reading much into it. 10-year yield is up fractionally. And let's see on the NASDAQ, if we break down to new lower lows. Okay. All right. So a little bit, we haven't done a live stream in a while. Since not this past Sunday, since the prior Sunday. I didn't do one on Thursday night for technical reasons, but a little bit of a change, and I've been wanting to get back to our old way of presenting, and it's becoming more exclusive, more how do you say, more back to what I used to do, and that is focusing in on the member, the experience, education. And I kind of deviated over the past couple of years from that strategy and trying to broaden out brand awareness. And I've done that to a certain extent. I've done that. I don't see the value of the Thursday night futures live. The audience is not as great as it is on Sunday nights. So I'm probably going to fade that out. I will, of course, with members, be doing Thursday night stock charts live, where we will be reviewing the same information that we always do. We'll be doing the chart requests. And of course, I'll put it out to everybody that is a member of the Contrarian Trader Public Forum, which is free. So again, getting back to more exclusivity. So if you're not currently a member to the Contrarian Trader Public Forum, please, I can't copy and paste because I am live. There's a link below on YouTube, link above on Twitter for it. It's free, no credit card required. And we will still be doing Sunday Night Futures live. But the time that it takes to do that live stream, preparation, everything, it's a lot. It's a lot. And I want to be able to focus more on developing courses. I'm working on a product called Quadrants and expanding out the product offering. So more to come on this. I'm pretty excited about it. I've been wanting to get back to it, but now's the time. So that's that. You have the link. Join, please. Free. And of course, 14-day free trial offer. And if you are a member of silver and gold level membership, folks, you get TrendSpider for free. I'll be demonstrating it. Hey, that's me. I'll be demonstrating the product later on when we talk about meta stock and we go over stock chart requests. If you haven't entered your symbol, of course, in the live feed right here in that green dot, join up. If you've already joined up, head on over, enter your symbol. We currently have a bunch already in there. So we'll go over those. And don't forget about TrendSpider. If you're not ready to join the Contrarian Trader, at least take advantage of their product. Automated technical analysis. If you're new to technical analysis, well, then you're going to need automated trend lines to help develop your pattern recognition skills, your support and resistance recognition skills. And even if you're experienced like me, I love drawing my own lines. But when I'm looking at an extreme overbought or extreme oversold trade, and I'm looking for my trend lines to be validated, bet your bottom dollar I'm using the automated technical analysis to tell me, are you missing anything? And sometimes I do. So automated technical analysis, great scanning functionality. And if you want to see what the thugs in Congress and Nancy Pelosi are doing, it's all in there. You don't need any other service than TrendSpider to provide you that type of data. A lot of people are selling these products for a lot of money. It's included with TrendSpider along with their awesome charting software. So get a bare minimum of a 35% discount code below on YouTube, above on Twitter. Check out. All right. That's my pitch. I'm sticking to it. Whoa. How we doing here? Okay, we're back. TZ Burton, welcome. Okay. Obviously, today was a closed market day. Tomorrow, Empire State Manufacturing Survey. Not a huge market mover, but one to watch. Wednesday, we get housing starts, building permits on Wednesday as well. That's a forward-looking indicator on Wednesday. You're going to hear a lot of chatter about the Fed minutes. Folks, I don't know how they're going to move. I don't know how they're going to move rates. There's a lot of talk about the revaluation of gold. You're hearing about an audit of Fort Knox to see whether or not we have the gold that we do. Currently, the U.S. government has that gold marked to market at $42 an ounce. That's crazy talk. So I think what they're going to do is they're going to revalue it at market and add like $900 billion if we still have the gold to our balance sheet at Treasury. But really, it's a drop in the bucket relative to our debt. So I think they have a big problem, meaning the Trump administration, and I don't know how they navigate this pressure on them to get this economy moving forward, honestly, to bring down inflation. And the only way you're going to get this economy moving forward is to cut spending. I don't see that yet. Cut waste, maybe. We're not going to know. All the talk that we've heard about U.S. aid, identifying those opportunities or that waste, that's only 0.2%. of the budget. I'm sorry, 0.02. 0.02. Very, very small amount. They need to get into Social Security, Medicaid, and Medicare. That's where the money is. And the Defense Department, that's where the money is. I'm not going to get excited about any of this. I'm confident that they're going to find tremendous amount of fraud. I did the numbers earlier. Elon Musk posted a spreadsheet of people that are drawing Social Security that are like 300 years old. We have millions of people that are apparently 170 years old in this country drawing Social Security. I don't know who's cashing the checks, but I tallied up all of the people on the spreadsheet. Elon had it, the filter on the spreadsheet, dead false. You had about 200 million people that are collecting Social Security benefits. There's only one problem. There's only about 350 million people in this country. You have nowhere near that many people, 65 and up or 62, whatever the age is that you collect it, that are eligible for those types of benefits. So there's something very, very wrong. You probably have twice as many people collecting benefits as they should be, if not worse. I digress. So I got started on that tangent all because of the Fed minutes, which is really going to be nothing, a nothing burger. You're going to have a whole lot of Fed heads out this week. You're going to have the Philly Fed's survey out on the manufacturing survey out on Thursday. Friday, S&P services, S&P manufacturing, blah, 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 blah. All right, so not a lot. And earnings are drying up now. In fact, let's talk about that. So going into the new trading week, it's all about China this week. Coming out tomorrow, we have Baidu coming out. We have Alibaba, which is the reason why I talked about China, coming out on Thursday. After the close on Tuesday, Toll Brothers, Devon Energy, Oxy, Etsy pre-market on Wednesday. These are all small cap stocks, mid cap stocks. Not Baidu, of course, or Oxy, or Toll Brothers. Carvana after the close. Toast, pretty good company. Cheesecake Factory. Pre-market, again, we have Alibaba, Walmart, a lot of retail coming out on Thursday morning. Wayfair, Shake Shack, Cheniere Energy. We own FLNG. Cheniere's in the same industry, but FLNG doesn't come out until May. They've already reported. So LNG may influence FLNG. Thursday after the close, Mercado Libre, Rivian, Block, Newmont Mining. That should be interesting. Texas Roadhouse, good company. Dropbox, Friday. Fridays are usually very quiet. More Chinese stocks. And I must admit, as much as I don't like Chinese stocks, I have to tell you, I think that the Chinese stocks are looking very, very good. So I had to put my opinions aside and say what looks good, what does not look good. Chinese stocks are looking good. Now, in terms of, let me refresh this because this does change. In terms of Fed rate cuts for March, not going to happen. May, probably not going to happen, less than 20% probability. July, June, we're back above 50%. This was below 50% yesterday. Now we're back above. So that means July must be measurably above. It is. I'm not sure what caused that, but okay. Valuations. We have, we're just shy of the October 2021 highs at 38.54 on the S&P 500. This is price to sales S&P 500 price to sales ratio hits highest level since the peak of the dot-com bubble. Probably fine. I don't think it's at the peak. We're still below there. We're not. We want to be honest. We're not up that high yet. We're close. No cigar. Okay. So a little bit of conversation about inflation. This is from Mohammed El-Arian. Good guy. U.S. inflation heated up at the start of the new year. Remember what we're talking about here tonight, folks. We're talking about stagflation and how we're trading it. I haven't spent a lot of time today on the equity markets because I'm not all that bullish on the equity markets. They're very, very expensive. Volume is not great. The retail investor is all in, going all in. That's not a great sign. I'm going to go to a couple of other charts in a moment that are going to tell you that all is not well either from a sentiment perspective. But back to inflation. We have inflation that we're dealing with right now. Core CPI, that's ex food and energy, skyrocketed for January. Change in consumer price index month over month, skyrocketed. Change in goods prices, ex food and energy, it moved up higher, but not parabolic. So it's telling you that food prices are influencing the inflation story. But the problem is this, is that we're seeing it in cocoa, we're seeing it in coffee, we're seeing it in eggs, but wheat, corn have just begun to run. Soybeans haven't done much yet, but you get that trio going. You have live cattle already very, very expensive. Hogs just beginning to break out. Pork beginning to break out. I mean, they're killing chickens right and left. I went into Whole Foods the other day to buy eggs. When I tell you there was not one single egg in the store, Couldn't find it. They were out. People are hoarding. And it's not because of simply inflation. They have the bird flu and whatnot. They're culling chickens. I get it. But it's inflationary. Because if you're not going to eat chicken, you're going to have to eat some other protein. So what happens to beef stocks? What happens to protein prices? They go up. There's not much room to go up on beef prices. But protein prices, they haven't begun to run yet. Core change in core services ex shelter, skyrocketing. These are just month-over-month numbers. CPI year over year, which is what the Federal Reserve looks at, bumped up higher. So they went ahead, they cut interest rates. What happened to inflation? Exactly what you would expect it to do. It went up. Why? Because the government never stopped spending. Borrow, spend. And when you take a look at the revisions in the jobs data, the U.S. job market effectively lost 163,000 private sector jobs in Q2 2024. Think about it, Q2 2024. This is in huge contrast to the monthly non-farm payrolls of 411,000 additions. In other words, non-farm payrolls were overstated by a massive 574,000 in Q2 2024. Can't make it up. And I was warning about this the entire year. And in December, January, I started warning, watch out for the revisions. They're here. So what they're doing is they're taking the pile of crud that was created by the former administration and they're handing it over to the Trump administration saying, it's your fault. That's what's going to happen. CRB commodity index. So the CRB commodity index is really just getting going here. This is a monthly chart. It's an all-in view of commodity prices in the aggregate. And you don't have oil running yet. Natural gas is up so far on the year, but it hasn't really broken out in earnest yet. Wheat prices haven't broken out in earnest yet. Soybeans certainly haven't. You've had a few sectors of the commodity spectrum rally strong, and they're dragging up this sector. The entire commodity space is not firing on all cylinders yet, but the charts are firming up. And when it comes down to credit card delinquencies, over 11% of credit card balances in the US are now 90 plus days delinquent. That's charge off area. You go 120 days, they charge it off, meaning the banks charge it off their books, they take a loss, and they sell it off to collection agencies. So I'm not even going to get into auto loans here. Auto loans are picking up as well, but I have a better chart to talk about that in a moment. In fact, let's skip on over to it. U.S. auto loans, 90 days plus. Delinquency rate hit 3% in Q4 2024, the highest in 14 years, the financial crisis recovery period. Serious delinquencies now surpass the 2001 recession and the 2020 crisis levels. So there's a guy on YouTube. He's called Lucky Lopez. Really good channel. And he was talking about repossessions by the banks of auto loans over a year ago, and they were keeping them in the back of the lots in some of the salvage companies. And he's a broker, but he wasn't have access to these lots. And somebody he knew gave him a tour, and there were just hundreds of cars that the banks didn't want to flood the markets with. They were just dribbling them out. This has been going on for well over a year now. So delinquencies are heating up. And that's why you're seeing gold rip through the ceiling. If there's one chart the Federal Reserve does not want you looking at, is a chart of gold. The more that gold moves up, it's just a reminder to the general public of how big of a failure that the Federal Reserve has been. They hate the fact that gold is moving up higher. And once the dollar begins to roll over and break down, it's going to go parabolic. And silver, which again, we're long of gold, we're long of silver. This is yet to run. I think that we're running up to 38 on silver. That's my price target. That marks the upper band of the rising uptrend channel. And Larry mentioned earlier about emerging markets. I usually agree with Larry, but on this we're going to respectfully disagree. When you see gold moving up higher, it's usually due to expectations of not much in terms of interest rates, or you can have a Federal Reserve raising interest rates, yet they're not doing it fast enough, a la circa the 1970s, early 80s. So you can have yields moving up higher. It's not bearish for gold unless yields are greater than the level of the rate of inflation, and then they kill inflation. So the fact that gold is moving up higher is a warning flag to the Federal Reserve. You're way behind the curve. And if inflation is moving up higher, that means that countries that produce commodities are doing very, very well because they could charge more for whatever raw materials they're developing. They also do very, very well because the US dollar declines in value, and that's like a tax cut. So their commodities go up in value. The debt of which they pay in dollars is going down in value. So it's like a gold rush, pardon the pun. That was not intended. It slipped out. What that means is that both of these generally trade in tandem. Now, emerging markets correlate with U.S. equity markets. If the U.S. equity markets pull back, expect emerging markets to pull back. But I'll tell you right now, once we bottom out, I'm putting more money into emerging markets than ever before because they're probably going to rally massively. And somebody came in the other day, and this is the March expiration, bought $6 million in VIX contracts. So somebody's expecting a very, very big move in the very short term. So buckle up. I mean, the time decay on these things is not small. And that's a lot of money. Let's talk about Meta, and we'll do some chart requests. I did some research on Meta. We currently have, for full disclosure, a short position now on Meta. We sold call spreads a couple of weeks ago, deep out of the money. We're still fine. They're deep, they're like up at 760, something like that, to strike. But we began buying a put spread on Meta last week. Why? It's because Meta has been up 20 days in a row. So I pulled the historical pricing data going back to, I don't know, 10, 15 years on Meta, if it's been around that long. I pulled all the data I could, and I popped it into ChatGPT, looking for the last time this had happened. It had never happened before. So while it's not impossible for Meta to continue up higher, the probability of it continuing up higher without a reaction to the downside is improbable. So we're going to continue to add to this position, not simply because it's going up. We're going to be looking for indications that Meta is hitting resistance or the price action is not great. The price action has been fairly light, but I will say that Friday was fairly bullish. Now, you can see here that they do have resistance up here at around $770. But when you take a look at a 4-hour chart, we already saw a little bit of weakness here going back to February the 10th, where we broke the primary upper band of rising support, and we created a new leg. It's still a healthy chart. I wouldn't go adding more simply due to the fact that it's moving up higher day over day. But I think that what they've done with Meta is what they did with Tesla a few weeks ago, and that is that the overall triple Qs were not doing well. So the street selected their chosen children that they were going to lead the Qs to keep the market excited. So they rallied Tesla on the heels of the election. Good stuff. So Tesla began to fade. Now you have Meta, which is moving up higher. Now the Qs finally broke out. Now my guess is that you could still have the Qs moving up higher, but the valuation here on Meta is such that it's very expensive. Well, let's begin with the financials here. We want to pay it the respect that it's due. It's a great company in terms of its revenues, gross profit, net income, gross margin, net margins, top notch, good stuff. Okay, but you're paying for that. EPS is at the upper ranges of historical norms. The PE is 27% above the 5-year quarterly average of 23.6. So you have more room for a pullback. Price to book, all-time highs. Price to sales, all-time highs. So just beware of these charts that look really, really good, because you have the law of probabilities that say, the probability of this continuing without a reaction to the downside is improbable. Does it mean it crashes and goes to zero or crashes by 50%? No, not at all. Doesn't have to. A normal pullback here is 5 to 6%. If I get a 5 to 6% pullback, I'm banking. That's all I want. So set your expectations accordingly. I would not go all in to the short side here yet, but be aware of what you're buying if you're deciding to get long of Meta, because it's very, very pricey. I can't see if my camera's straight here. All right, hopefully it's well. All right, let's do some chart requests, and we will call it a night. We have LI, ISRG, all right. Intuitive Surgical. GCT, SoundHound, great company. BlackRock took a big stake in SoundHound. NVIDIA as well. Poet. Okay, I'm going to shut it down there. Palantir for good old Talon. All right, let's get to it. Mercado Libre, a great looking chart. There's nothing not to like here from a bull perspective. Would I initiate a new trade? Probably not. Horses left the stable. And you can see that we got stopped right at the upper band of resistance and the upper. I have the auto fibs on here right at resistance at 2133.99. Of course, Talon. Anytime, brother. Tim, NVIDIA dumped SoundHound shares. Oh, I didn't know that. Great information. I can't post Tim's comment because I'm looking at this on YouTube. Thank you, Tim, for sharing that. So just be careful here on Mercado Libre. We are at measurable resistance as measured by the Fibonacci's and by simple price action. We're just playing connected dots here. Daily view. Yeah, you can initiate here. I wouldn't, but what we can do is play what if. What if we get a pullback? What if we likely support at 1995 spot 66? They retested that the week of February the 12th. Now, if you're going to buy on momentum, you got to wait for a close above 2145.67. Good looking chart. I wouldn't sell it personally. I just wouldn't initiate a new trade. I would be looking for that to be my price point. If I was swing trading it, I'd book profits right at that price point and then look and wait to see whether or not we break out. If we break out, I'll buy it back. So not great from a tax perspective, but from a trading perspective, you can't just trade by taxes. So that's how I would trade Mercado Libre. Beautiful chart, bullish. I think it goes up higher. I just wouldn't initiate here. Too much risk, not enough reward. We know the support. We know the breakout point at which we need to see it break out above to earn our investment dollar. ISRG. ISRG, yes, it was right. Intuitive Surgical. It broke out last week. This is a good company. I used to try to play the options here. Very, very bad markets for the options. Good stock, though. Let's take a monthly view. Wow. What a heck of a run. Look at that. Bam. Wow. All right, so what we did here is we broke out last week. I'm looking for a retest of 590. Let's just call it 591, round it up. Keep it simple. I'd be a buyer at that price point. We broke out on Friday, daily chart. I think we have another leg to go up here. It's extended on a weekly time frame. It's extended on a monthly time frame, but the momentum is behind it. And in fact, it's flashing a Bollinger Band squeeze here. Bollinger Bands in red, inside the Keltner channels in green or yellow, whatever color it is. I think this gets resolved up, bullish. Thank you, Gay. Appreciate that. GCT. All right, GigaCloud. I don't know this company. But it is in a downtrend channel. You know, when you're in a situation like this, you know, I'm a contrarian, but you know, that word gets used pretty loosely. Simply because I'm a contrarian doesn't mean I look at a chart that's going in a downtrend and I make the bet that it's going to go up. That's not what I do. What I do is I look for changes in the price action that would imply that we may have a change in direction coming up soon. Now, I can make the case that I see that here, but I wouldn't invest yet based upon that due to the fact that it's a hypothesis. And a hypothesis needs to be validated. So right now, let's get the bear case out of the way. We're putting in lower lows and lower highs. Simple as that. End of statement. That's all you need to know. Lower highs and lower lows. Now, from a contrarian perspective, oh God, it's going to drive me crazy. From a contrarian perspective, I want to take my crayon out. I didn't want to do that. I'll do this. Are we seeing an attempt by bulls to put in a higher low? I don't know. The most honest thing you could say to yourself as a trader is, I don't know. No ego. You have no ego. So right now with GCT, if I were forced to place a bet, it would be to the downside because that's the trend. And as the saying goes, the trend is your friend. That being said, if we were to break out and close above this upper band of resistance, that let's call it 2250, around there, give or take a dime, on a weekly time frame, and we close there, that becomes interesting. And what makes it all the more interesting to the long side is that you have a Bollinger Band squeeze that is established. It's setting up very, very nicely. The rub is this, is that a Bollinger Band squeeze doesn't mean that it's going to go up. It could also go down. And either way it breaks, it's going to break really, really hard. So the only guarantee that you have here is that when this thing breaks out or breaks down, it's going to be vicious. So I would wait, if you're looking to get long here, for a breakout above this resistance level. In fact, I would create an alert, break through, keep it on a 4-hour time frame, and GCT. Remind myself of a Bollinger Band squeeze. In fact, I'm also going to want to set up an alert letting me know when we break support, because then it becomes a short. And we'll keep that active for a while. Okay. Out of curiosity, I just want to check seasonality here. You know, in this business, 50-50 odds are not great. In fact, they're terrible. So there's really no edge. In fact, there's not a lot of data here at all. You can't even use seasonality. You don't have enough data. Forget about seasonality. Let's check in with the insiders of what they're doing. Anytime now, Carmine. You have insiders selling. One buy. I don't know who this guy is. Looks like a director. I don't want all CDOs. I want officers. All right. So you're not seeing an edge of either seasonality, insider buying right now to get long. So right now, all you're doing is in your wait and see mode. That's it. The hardest part about this business is patience. It's the hardest part. I was not born with patience. Wait for the breakout, wait for the breakdown, trade in that direction. You'll be rewarded. What else do we have? Soundhound. Oh, I see. I guess that's the NVIDIA news. Wow. So we were long. I did a video. I think this is the last video I did analysis on a stock, and this is what I want to get back to doing. I did it back in October, and it got a whole bunch of views, man. And it was right back here, and I bought it. I bought the shares. I forget where we sold it. It was a good return. I did not get out the high. I'm not going to pretend I did, but we made a good amount of money here, and now it's short-term broken. This is a bearish chart. It's probably going down into the single digits. I would be eyeballing $8.42 as your support level. And remember what we just spoke about. What's the trend? The trend is down. We've now gone from higher lows and higher highs to lower highs, and now, as of last week, lower lows. Tim, yeah, I wish I could bring your comment up. I want to get back to it. And it takes a lot of research to do, a lot. You know, it's those videos are only about 15 or 20 minutes, but it takes me hours of research time and production time. So I gotta clear up time in my calendar to make sure that I'm able to do that. All right, so Friday, horrible day. Don't be surprised if you get a check back to around $12.20. I would not be a buyer. Don't get lured in. There's way too many people still think that this stock is in an uptrend. It is not. It's broken. It's in a downtrend. Avoid it. Hurts me to say. The trade is over. For now, anyway. CYBN. This is interesting. What the heck is a CYBN? I love long consolidations. Love them. Look at that consolidation. I think I've already used this on this live stream, but the longer the consolidation, the greater the validation of any breakout. That's why I like them so much. So the first thing I'm going to point out, A, is that I did not draw these trend lines. I don't think I've ever seen this stock in my life. This is the automated trend lines. Click of a button. This is what I was talking about earlier. So we are clearly in a downtrend. All I care about is when we break out. And obviously you could see I'm looking at the Bollinger Band squeeze. So our alert is set to the upside. I wouldn't short this on a breakdown. Let's do this as well. You still could see that you're getting rejection once you hit this resistance level above the two resistance levels. but we are trying to put in higher lows here. No guarantee it's going to happen. Seasonality, there's not enough data. Insiders, they're doing nothing. No buying, no selling. Let's go to the daily chart. Very, very tight consolidation. And again, on both a daily chart and a weekly chart, you have the Bollinger Bands trading inside the Keltner channels. This is going to have an explosive move. Again, I don't know if it's going to be to the upside or to the downside, but whichever direction this thing decides to take, it's going to be explosive. Oh, there's a sweet spot for this camera. Is that it? I think I found it. I think I found it. All right. Here's your Bollinger Bands on a daily chart. This needs a news event. So if I had to put my nickel down, I'd have to say I'm bullish on CYBN, mostly due to the long-term consolidation. It stopped going down. Poet, I don't know this company. It's under pressure. It's had a great run. Huge run. But it's under pressure. I'm not a buyer here. Certainly not a short. If I were to buy, it's going to have to be on a breakout above resistance. I'm not going to set a breakdown alert because I wouldn't short this stock. Let's go to a daily chart. Just take note of every time they rally this, sellers move in. All right, it's a sign of a top. Again, there's no reason to buy this stock. It's at resistance levels. It's under pressure, lower highs, lower lows. I would avoid this one. But I wouldn't short it. I would not short it. CSIQ, Canadian Solar. So my take with these alternative energy plays is that if oil moves up higher, they will do well. A lot of people think the opposite. If oil moves up higher, alternative energies move lower. No, the alternative energies are very expensive. So if oil goes up, it makes it more cost effective to use alternative energies. So I like the daily chart, but I never want to go over a daily chart before I take a look at the weekly or monthly chart. I think this is getting ready for an explosive move. Let's just check back in with oil for a moment. I want to see if oil is, I don't care about it still being up. I want to see if it's gaining steam. It was up about 0.75% earlier. Still up about 0.75%. So, yeah, let's get these trend lines off of here. It makes it too noisy. So let's talk about this chart. You have a very, very tight consolidation. Very, very tight. As measured by the Bollinger Bands, which have been trading in the Keltner channels for, my God, since June of last year. I think that this is getting ready for an explosive move. Let me just check really quick with the weekly chart of oil. Oil is still fairly weak. It was not a good week last week. Let's go back to CSIQ. If oil were breaking out, I would be more apt to put this position on now. I'm still not opposed to it. Let's do this. Let's play a game. What strategies could we employ? Because I think this is going to move. I don't know why this is not coordinating with. I know why. That's why. Okay. Let's test that. Yes, working. All right. With this one here, I would want to go out far. The Bollinger Band squeeze started back in June of 24. I'd be looking to buy a call spread going out to June of 25. How expensive are the options? They're very expensive. I would first check to see whether or not they reported earnings. I would not put this trade on until I confirm that they reported earnings. Seeing an IV rank of 46 on a stock that is in a consolidation leads me to believe they have yet to report earnings. No guarantee, but just a probability. And I would be looking to put on a spread, maybe a 65. Buy a 65 call, sell a 26. Sorry, it's 26, 15. 15 call. And that would be your call spread. So you're effectively long at $1.50. So you've identified your max loss. You have virtually no time decay because you have so much time to go till expiration. 10 contracts would cost you $1,500 with max profit of $3,500. That's pretty good from a risk reward perspective. I would just rather buy these options, which with the options being much cheaper, they appear to be a bit expensive due to earnings or some other event that is out there that I don't know about. Could be a conference or whatever, but the options are very, very expensive. The other thing you can do is take advantage of the expensive options. If you definitely want to get long, selling at the money, put spread. This is a very low risk trade here. I don't know how real this is. The options, the markets may not be good. This looks too good to be true, to be honest with you. You're risking 600 to make 400. What does a single get you? Sell a single. Man, these options are expensive. So if you definitely want the shares, why not sell a put? That way, you're not paying $10.63. You're paying $10 minus the credit received. So you're paying $6.80 for the shares. Is that right? No, $7.80 for the shares. No, $8.80 for the shares. Sorry about that. So I like CSIQ looking very, very good. Last one up is going to be Palantir. Great company. I haven't looked at this chart in a while. Oh, this is parabolic. I'd be selling call spreads here. I'd be looking at the short side on Palantir. I would not short the common stock, but this has now gone parabolic. The path of least resistance is still to the upside, but I would sell it deep out of the money, 20 delta calls. Just make sure that earnings are out of the way. I believe they've already reported. Hey, George, you're welcome. Tim, Sean, you're welcome. Thanks for being here, everybody. Everybody have a profitable trading week. Thank you for being here and have an awesome night. Don't forget about TrendSpider, link below. 35% discount code at a bare minimum. And don't forget, I give it away free to our silver and gold level members. I'll talk to you soon. Be well.